Hello, everybody, and good morning, and welcome to Indian Open right here on BloombergQuint Live. It's Friday morning, the first full week after a number of weeks, really, of sorts. Or actually, no, just the first, second, third May was a long weekend. But otherwise, been used to a whole host of long weekends the month of April and the first weekend of May. Now, no more. So the last Friday, the first Friday of the current month, and it promised to be an interesting day of trade simply because we were looking like being corrective, but the world markets have been okay. We are looking like starting off okay today. The SGX Nifty points toward a start in the green, and this whole chatter around a possible stimulus, if it does come about, what does it do as well? As does it prove to be a bit of backstop to heavy shorting in the Indian markets? That's the other key thing that you have to ask. Well, let's wait and watch. I think the next 24 hours or next 48 hours could well be answers to that. What do we do over the next 8 hours, which is when the equity markets are trading? Let's put that question across to our guests. Samir Narayan Johnson right now with his thoughts, and then we'll get in my colleagues to tell us about the key stocks and news, key newsmakers, and what could those individual stocks do. Samir, as always, good having you. Thanks much for joining in. What's your sense, Samir? There's a bit of a we dropped like a hot potato from those 9800 levels. We've been now meandering around this 9100, 9200. Valuations notwithstanding, because you don't quite know what the earnings are going to look like. Are you comfortable putting fresh money to work in select names, or are you staying by the sidelines right now?
Morning, Neeraj. I think the key thing here is that what is your time frame? For example, if you're willing to look at a stock that could go down for any reason, say another 20-30%, then you should start deploying money gradually. Because I think the way things are quite fluid even as we speak, because the numbers of COVID cases are still spiking. So I don't think we are behind the peak yet. There is no clarity on time frame as well as the authenticity of the vaccine that we have in the pipelines, and the fact that the earnings reports that have been happening are all back-ended. So for example, this is all March quarter data. If you look at April, May, June quarter, you'll probably see a revenue drop of close to 40-50% for most companies, because we've had a lockdown extending almost for 2 months of the entire quarter. So I think the earnings will be probably and hopefully the bottom as far as April, May, June quarter is concerned. And if the markets are looking at slightly, they are looking ahead to say the second half of the current fiscal for some sort of a recovery, then maybe you could see that the prices could sustain. But I think in case the April, May, June quarter gets worse than what one is right now fearing, then maybe you'll get another dip, and then that's when you can probably go in with your additional allocation. So the point is that right now, if you're willing to buy a stock 20% cheaper than what you are buying today, then that's where you should be putting your money in.
Samir, let's talk about the usual suspects. Of course, we do it every day, but the theories and the thought processes of guests are different, and the time is, as you said, so fluid. So a lot of things have changed between then and now. Now, let's talk about financials first, and then we'll get to consumers as well, because I think Asian Paints, HUL, etc. are in news today. But financials, and what's your thought on the beaten down NBFC pocket now? We spoke about, I think, a couple of weeks ago. You seem to be not completely convinced, but maybe paying attention to some green shoots. Are you doing that, or do you believe that there are better avenues to play? Why go into this volatile sector right now?
Neeraj, I think the entire NBFC was predicated on the consumer credit story in India, which is pretty much what we played out in the last 4-5 years. Now, if you go to see the next 2 quarters, you're likely to see the impact of job losses, income cuts, cutbacks in discretionary spends. So I don't know whether, the 25-30% kind of a loan book growth for most of these NBFCs, A, will it be sustained, and B, what will be the cost of, the credit cost that they'll have to bear for all this. And coupled with the fact that there is obviously a cash flow mismatch, because right now the moratorium has been extended on the asset side, but not on the liability side. So I think the problems are quite of large proportions to be dealt with at the same time. And I think the valuations are still not exactly in the value zone, because even most of them right now are quoting at about 3.5-4 times book. So maybe if you go from a classic value tenet, which is what most of the 70-80% of the market right now is available, then I think these NBFCs could probably still have more room on the downside.
Okay, so maybe some more room on the downside for the NBFCs. What about Metals, that's the key thing, right? And before we get down to the whole metal conversation, let me get in my colleague Nikki Mirchandani, who is here to highlight the performance of Novelis that came out post market hours yesterday and which will have a bearing on how Hindalco does today. Nikki, good morning. What stood out in Novelis numbers?
Well, it's the adjusted EBITDA. The operational performance was way better than what the consensus was. Net sales, there was a decline coming in as much as 12% year-on-year basis for the company. But then adjusted EBITDA was up by as much as 7%. It had to be adjusted because it had a positive impact of $29 million on account of contractual obligations towards the customer in this current financial year. Having said that, the profitability of the company, however, took a hit to an extent of 38%. But overall, if you look at the numbers, there was fairly decent set of numbers, given that even the volume picture was down by as much as 7%. Shipments were down by 7%. It's the favorable product mix along with the few cost operating measures that were taken by the company, along with the higher LME prices, which essentially led to a good show coming in from Novelis. Do remember the fact that Hindalco has a 77% of the total EBITDA coming in from Novelis, as well as combined together some part of it from the copper division, which has in turn led to a good show, is expected to lead to a good show even for Hindalco as a whole. So you can expect some sort of positive opening on account of that. But some kind of COVID impact that the company reported was, it said that the quarterly guidance of EBITDA of 422 to 440 is not suggestible. It's not sustainable at this point of time. It's temporarily shut down some of its plant. It's cut down the capex by as much as $100 million as compared to the previous financial year. Sounded a little positive from the European country, because it said that the supply chain has started resuming there. So that is one pocket that we like to keep an eye out for. And the beverage can demand, that is also expected to be resilient. So it's not going to be much of a hit, but then auto demand remains to be weak. And as we all know that the profitability margins from that division is literally a little more higher. So you can expect some sort of, profitability hit in terms of margin coming in, even on the Q1 numbers for Hindalco as a whole. On Alris acquisition, now these numbers, Neeraj, that have been reported, they're devoid of Alris. It's going to be included only in the next quarter, that's the Q1, or rather the present quarter. It said that the Lewis port is yet to find a buyer, and it's in talks with U.S. authorities. It's given out the EBITDA for that particular Lewis port, which on full ramp-up capacity will fetch an EBITDA of around $120 million. On divestment of double plant, it said it's still pending Chinese authority approval. So that's one bit of it in terms of Alvis acquisition too.
Thanks, Nikki. Thanks so much for that. Samir, any thoughts on this performance by Novelis, and can it have an impact on Hindalco? Would you be a buyer in any of the base metal stocks?
Well, Neeraj, I think if you look at the China data that came yesterday, both their services PMI as well as the other set of PMI data, I think that clearly shows that China seems to be behind the peak, and they seems to be clearly turned the bend. But so therefore, the entire base metal pack obviously has got a lot of cyclical linkage to the way China does. But talking of Novelis, I think 2/3 of their shipments are basically the can demand, the beverage can demand. And that right now, the outlook seems to be sort of recession resistant, especially in North America. But so the demand in South America, the slack there is right now, they say that is being offset by the North America and the Europe. But I think this is too early data as of now, because things are still evolving. So I think the moment you look at how post the lockdown, the way Europe starts normalizing, how US is behind this, I think that clearly, that's a variable that one still doesn't have a hang on. So yes, the company is doing the right thing. They are trying to sweat assets. The Alris acquisition, I must also add that the China approval is still pending. So I think that's still something that has to be still ticked in the boxes. But net, I think the free cash flow ex capex is about $1 billion. And right now, as far as Novelis is concerned, both their profitability has still been holding up, because even for the full year basis, I think the EBITDA per ton is actually quite decent. It's roughly, if I'm not mistaken, about $450 per ton versus about $420 last year. So even though the volumes are flat, the EBITDA is still decent. So that's a positive sign. So which means the cost cutting will ensure that they are maintaining their cost position, which is quite necessary whenever the revival happens. So I think in terms of metals, both Hindalco, I think even Hindalco is right now available at 6 times EV/EBITDA. And right now, given the fact that your outlook on realization as well as volumes is nothing great, so if it's available at half-time book and 6 times EV/EBITDA, I think it's a good value zone. So one should be positively positioned towards taking an entry into the stock.
Okay, so well, maybe Hindalco has the thumbs up from Samir Narayan as well. Motilal Oswal put out a target of 179. Nikki laying out what Novelis the numbers mean for Hindalco today. Maybe expect a bit of a gap up. The markets are anyway supporting that. What about the other stocks or the other stocks which are in focus today? The 3 or 4 names that you should watch out for. Agam Vakil Johnson with that shortlist. Agam, good morning.
Good morning, Neeraj. And I'm sure Reliance Industries will be in focus, not for one, but well, many reasons. Firstly, we have investment firm Vista Equity Partners, which will invest little over 11,300 crores in Jio platforms. And the investment values Jio platforms at 49 lakh crore rupees. Vista's investment will translate to 2.3% equity in the firm. And once again, Bloomberg News reports that Reliance Industries is considering selling its stake in Asian Paints. The stake is 4.9%, valued at little less than $1 billion. And this is, of course, in terms of Reliance, which is stepping up efforts to trim debt. But we do have reports which suggest that Reliance has, at this point in time, denied that. And moving on to earnings, we have RBL Bank, where net interest income has risen 38%, but profits have declined 54% on account of higher provisioning. ICICI Securities revenues rising a strong 12.5% with a robust 28% increase in net profit, and a bulk of the strength is coming from retail equities segment. Science is also in focus. We've seen muted quarter with revenue decline around 3.8% and margins seeing a contraction of well over 5%. And finally, we have Tata Motors, which has withdrawn its NCD issue of 1,000 crores in view of higher cost expectations from market participants. And this is due to tight money market conditions. The company says for now it does have sufficient liquidity, so it shouldn't be a problem. But, well, needless to say, Reliance Industries will once again be in the focus in trading today.
Certainly would be. Thanks a lot for that, Agam. Samir, how do you read into this one? It's not just the fact that there are some very interesting deals. I mean, Vista Partners and the history that they have is fairly fascinating in terms of the investments that they do. But the fact that Jio is able to get in these investments in times like these, what does that say about the confidence that the partners have in the platform? And does it therefore mean that for a retail investor as well, who can't invest in Jio directly right now, but only through Reliance, it still might not be a bad idea?
Well, it is. I think, the strength of the platform is definitely, that's completely taken on board. And I think everybody is clearly seeing a lot of value there. And I think the other important part is that in a time today where liquidity and solvency is right now the key factor, the ability of the management to deleverage despite such adverse times, which shows that today they are getting great takers and at great value. So therefore, the whole confidence on what these platform can deliver going forward, because the entire Facebook deal and how the entire super app will play in terms of the ecosystem, that also tells you that it's just not that India is the largest place of where the internet subscriber growth is good. Your WhatsApp has almost 400 million subscribers. So I think those are key factors that shows that the monetization of the platform that has been in the investment phase for the last 3-4 years, I think that clearly is coming out loud and clear. And, the very fact that they are also hinting that they would be looking at a geo listing somewhere down the line, which means that the investors will be able to, get a, separate business where the cash flows are clearly available, and you could have a path to capitalization. So I think it augurs very well, and it's a great thumbs up for India as well, because the kind of marquee names that have sort of put money in, and we're still counting. I mean, 5.7 Facebook, then Vista, then Silver Lake, and God knows maybe who else. So I think the management is very clearly focused on ensuring that their net debt reduction target is clearly completed, and I think it's a very good thing for India Inc. So it's a great story, and thank God that it is happening out of India.
Yes, indeed. Thank God it's happening out of India. And well, viewers, so keep that at the back of your mind. Please choose how and in which fashion you want to invest into a business like Reliance, because the stock is doing well. There are great partners, but there is a market risk to that, all of this as well. So you have to be mindful of all of that. And Sameer's time horizon and his valuation comfort might be very different than what yours might be. But it's important to hear out what experts believe, and that's why this question is to Sameer. Okay, Sameer, stay on. I want to talk about some of the other results as well. I think Cyient came out with a really horrible set of numbers. So maybe Cyient, and if not Cyient, what are some of the other mid-cap IT names, and what does somebody think of them? But good to get in a sense of the charts as well. It's 8:45 or around that time when we do that. Get in Shrikant Chauhan with his thoughts. Shrikant, so good having you. Thanks much for taking the time out and speaking to us. What are your thoughts, Shrikant? Yesterday it looked a bit iffy, but we might start off slightly higher today, maybe led by Reliance. Do you think we can extend those gains today?
Thank you, Neeraj. Good morning, friends. Yeah, one thing is very clear that the Nifty is forming some corrective upward pattern. It is going to pull the recent losses, because last Thursday the market was around 9,900 levels. From there all the way we saw vertical fall, sell off up to 9,100 levels, but now again it is reversing back. So it's a pullback. It's just a pullback to the recent fall. After that again we are going to see one more decline. But yes, in this particular pullback, we may even see the levels of 9,400 or 9,450 on the higher side, because stocks like Hindustan Lever, Reliance Industries, and few other index heavyweights, they are doing well. They are holding well above their important support area. So yes, pullback is not ruled out. Strategy should be to look for adding long position if we see any correction during the day, close to 9250, 9230 levels, because the confidence level is not there. So even after opening higher points higher, I am not expecting market to continue immediately. I think during the day we are going to see some correction. So on decline, certainly we should look for adding long positions, because 9170 is acting as very good support for the market since last 2 days. So 9170 should be the final stop loss for creating any long positions on Nifty. We can again expect 9350 and 9450 on the high side.
Okay. Shubham Agarwal is also with us. Shubham, good morning. Thanks for joining in. Shrikant is bullish. I was wondering if you are bullish enough to initiate any fresh long biased positions after the open today.
Hi, good morning, Neeraj. Yes, absolutely. I'll be looking for buying in even after the opening today, which is showing already a positive note, because there is a very interesting data on the Nifty that we shouldn't ignore. And that is that if you look at any fresh series starts on expiry, generally we see that the OI gets added. But what has happened in this expiry? Since the first day of the expiry, the OI on Nifty has been shedding down instead of going up. So generally rollovers doesn't happen 100%. So if you look at the last month rollover, it was just 70%. Even after that, the OI was going down and the market was correcting. So that was indicating that the market is not ready to initiate any short position right now. And now I think that with the pullback or the rebound that we might see on the Nifty, there's a very good possibility that we will see long coming in. And there's a good possibility 9600 can get retested on the Nifty. So even after the positive opening today, my recommendation will be keep approximately a 100-point stop loss and go long on Nifty with a first target of 9600.
Okay, so well, some bullishness on the screen from both our experts. How do you play this bullishness aside of the bet on the index? So Shrikant, I'll come to you. Do you have all long, both the long calls today, or is it a mixture of long and short?
Yeah, both the calls are on the long side. We like metal stocks, because yesterday when there was like some recovery in the market, we saw some activity in all metal companies, especially in JSW Steel, Steel Authority, as well as in Hindalco. So JSW Steel looks good, which is around 173, 172 levels. And from here we may see the levels of 183, 184 on the higher side. So we can keep stop loss at 169 for adding any long positions on JSW Steel. We also like Hindustan Lever, which has fallen to its extreme level on the back of specific deal, and after that it is reversing back. So yesterday the stock has formed reversal formation, and it is forming some higher bottom as compared to its previous low of 1800, 1850. So again, we can expect at least 2090, 2100 on the high side from lever. So it's a buy at these price with a final stop loss at 1950.
Okay. What about you, Shubham? What are the stocks that you recommended today? Again, since you are so bullish, are you doing futures? Are you doing options? And what are the kind of stocks?
So Neeraj, I'll go with options as usual, and this is the first half of the expiry. So generally options theta will decay less. So a simple long call is what we can look for. Now, when we are talking about a decent run on the Nifty, I think large cap will play a very important role, and Reliance can be one of the major participants. So yesterday also we saw that even though the market was down, Reliance broke out from a continuation pattern, and even on the derivative data, it is indicating that there's a long unwinding cycle which is intact in Reliance. So a very good possibility that we will see some more follow-up buying coming in with a short-term perspective. So 1540 strike call option can be bought for a target of 90 rupees with a stop loss at 40. And the second call will be on Tech Mahindra, where some of the selective IT names have started building some long positions. And now if you look at Tech Mahindra, from the recent support, it rebounded. Yesterday also there was a breakout, and today also we feel that there's a good possibility of a follow-up buying coming in. So 540 strike call option can be bought for a target of 22 rupees with a stop loss at 9.
Okay, now 2 or 3 usual suspects that I just want to, and Shubham, I'll come to you because Srikanth always anyways gave a buy call on HUL. I wonder if you are bullish on HUL.
Absolutely, Neeraj. In fact, I would not be bullish for a very short term because in the short term, it might even pull back to the level of 1850 or 1900. But if we have a slightly medium term outlook where we are talking about at least 2 months, I think this is a very good level to go and accumulate HUL. So from the current level to anywhere between 1850, gradually one should look to accumulate, because if you look at the long-term setup, the long-term setup is indicating that approximately around this area, there's a bottom that can get formed. So we might have a consolidation for some time, and post that we can see a breakout again. And if we give it approximately 2 months, my target will be 2500 on HUL.
Okay, we just keep that in mind. Long-term averages, multiples, 5-year average multiple 57 times. At about 1950, it was about 51 times. So currently maybe about 52 times. So lower than the averages. Strong franchise has gotten beaten down a bit as well. But consumption as a pocket might be just an interesting sphere. Actually, coming on this one, come on these two names, Samir, fundamentally, HUL and more importantly, Asian Paints, because there is a technical trigger of some block overhang, plus the fact that a company is trading at 55 times currently.
Well, Neeraj, I think the discretionary spend argument is, very clearly, at least for the short term, under clear pressure because of, your wage losses and, income getting hit. But I think as far as HUL is concerned, short-term price movements, I'm sure the other guests are better judges. But from a secular point of view, I think when capital has to be allocated at, even though they are great franchises, but when the growth that you're ultimately buying is 10-12% and you're paying 55-60 times forward, I think it just doesn't make case for a fresh allocation from a clear long-term perspective, for the simple reason that if you believe that the markets will put this behind us and recover at some point in time, maybe a quarter, maybe 2 quarters, maybe a year later, then I think there'll be a lot more businesses available where there'll be substantial operating leverage that one can extract. And I think that's where you're likely to see far better returns also going forward. But yes, in the interim, till the time you see any economic recovery or green shoots which can then sustain and build, then I think these will be the preferred place for investors to park their money, being the so-called defensives. So I think from that perspective, that is how one needs to see that. Yes, they might be good high trades, but do I make an allocation which I need to probably hold on for the next 4-5 years? Well, that may still be debatable.
Okay, so that's a view on these as well. The other is quick chart checks on, and then the fundamental conversations on those. RBL and IndusInd Bank. IndusInd had a big sharp up move yesterday. RBL actually dipped intraday, but the results have looked okay. How do the charts look for both of these, Srikanth?
For IndusInd Bank, one thing is very clear that it is forming some bullish formation. It is forming ascending bullish triangle, which is continuation formation. and above the level of almost 490 we can expect furthermore upside. But at least from current levels, currently it is at 454, 455. So from here we may see the levels of 490 again. That's the overall reading of the formation. So it's a buy even at these price, because yesterday also when there was some pressure in financials, and in fact in last 3-4 days, whenever we saw some pressure in the market for financials, we saw specific buying activity in IndusInd Bank. So it shows that it is heading upward. It is heading for the levels of 490. So it's a buy at these price. For RBL Bank, again, the volumes are significant, but at the same time, the way there is a positive divergence on the stock, I think the stock is heading for the levels of at least 150, 155 in the near term. So here also it's a buy, but we need to keep a close track or the stop loss at 125, because it was yesterday's lowest level, and today after the announcement of the result, how it performed, that is also very, very important. So today if we see the stock is breaking the level of 125, then again the stock may fall to the levels of 110 or 112. So buy, but keep a stop.
Okay, what did you make of the numbers, RBL Bank, Samir?
Well, Neeraj, I think RBL has clearly, numbers have actually confirmed the fears that investors had as to how will be the credit cost and how will the entire, moratorium on the book impact show. So, that's why you clearly saw that the loan growth has slowed to almost 7% now, which is actually quite low. And the fact that they've also seen a substantial amount of, SA balances getting drawn down. So although provisioning has been bumped up, and they believe that they will still be doing a bit more in the second half. But I think the valuation definitely gives a comfort. But then, at 130, I would say that one really doesn't know how much of book impairment one will have to go through once this entire COVID crisis goes past. So even though, from a book value of roughly 200 rupees for 2021, I think at 130, the valuations are comfortable. But honestly, with 1/3 of the book, by value under moratorium, one really doesn't know as to how much of pain one will have to see more, because the credit cost is definitely, surprised. And so, the slippages have been far more than expected. So I think here one would rather wait and watch as to how the April, May, June quarter, because that to my mind should be probably worse in terms of the operating metrics.
Okay, so keep that point as well in mind when you are looking to invest either out or into RBL Bank in the session today. Quick thoughts on the other two names that are crucial today before we start trading. About a minute left, so quick 30-second views each. Shubham, I'll come to you first. ONGC and the fall that we've seen, how does it look like? Is it near bottoms?
Neeraj, I would expect that the current rally has just been a pullback, so very good possibility that we can retest the level of 65. So my view will be, just in case if we see a pullback, sell around the level of 78 with a stop loss at 82 with a target of 65.
Okay, so you're short on ONGC. Interesting. The other one is Asian Paints, as I was saying. Shrikant, very active the last few days. Can it go down further?
I think the stock was deliberately down to the levels of 1550 because crude was at $25, $29, but the stock was consistently falling. But it clearly shows that there is like a rise in the volume, and we can expect one rebound up to 1725, 1730, where it has multiple resistance of multiple averages. So it's a buy at these price or on declines with a final stop loss below 1500.
Okay, Jaman, stay on. We'll take in opening thoughts now. Post pre-open, not opening thoughts, but post pre-open. More stocks to be discussed as well. There is aviation, which we haven't spoken about, Axis Bank and HDFC Bank, which we haven't spoken about. So we'll talk about all of those. Lots of newsmakers as well, try and see how they are reacting today. But keep in mind that the start might be positive or will be positive. Asia's not looking all that bad. US was very strong. The SGX Nifty is pointing towards gains as well. So we'll have a start led, I think, by Reliance Industries. The question is, can we do more post that? And I think our experts have said that they'll be comfortable initiating a fresh long on open as well after we start off higher. So that's the key thing. Watch out for Reliance. Watch out for banks. Watch out for Bharti Airtel. Had a bit of a corrective move yesterday. I think it'll be interesting to assess what Samir thinks of Bharti Airtel as an investment with Reliance doing so well. But here are the first rates in the pre-open session. These rates were chilled, so I won't dwell too much on them. just keep in mind that you're looking like starting off well in this session. So, well, some large moves in GAIL, HUL, RIL, etc. But RIL really, I mean, just look at that stock all over the place. But yeah, do watch out for this one. I don't think HUL will have a 6.5% uptick, but do watch out for this one. I don't think HDFC Bank may not have a 3.5% uptick. So let's give these rates a chance to settle down before we talk more about them. GAIL, maybe a 10% higher move will not happen as well. So these 3 or 4 names, I think you should be watching out for. On the downside, not too much, but maybe some trading moves might be seen as well. What about the broader end of the spectrum? It'll be interesting to see what some of the mid caps do in the session today as well. And mind you, the currency markets are open today, so we'll see the rupee reacting. But Cyient might react negatively to its numbers. Looks like the pre-open session is already showing signs of that. And on the flip side, RBL Bank, would it start off 5-6% higher? That's the other thing. Let's wait and watch what happens here. So these are 3 or 4 names that you should be watching out for in the session. Let's give these rates a chance to settle down before we talk more about them. Actually, the mid-cap IT was interesting. Samir Naran, I don't know if you managed to see the numbers of Cyient, but the operating profit margins halved from 9.5 to 4.2, actually more than halved. Morgan Stanley has this tactical short call on this one. It's not an FNO, so I'm not asking from a trade perspective. But for somebody who had Cyient in their portfolio, prudent to get out of it, maybe even switch to some of the other IT names? I mean, if you track it at all?
Well, Neeraj, I think Cyient had a specific client-specific issue, and therefore they saw the 4% Q-on-Q drop in revenue. But I think especially their aerospace and defense and transportation verticals, I'm sure there are big demand-related challenges, and they will only intensify in the near term. So I think the way they have taken their they've mentioned that there was some significant impact because COVID, and therefore the approvals did not come through. There were some supply chain issues. I think all that is clearly something that they will need to grapple over. And as far as both for mid-tier tech and even large cap tech is concerned, the very fact that even though a lot of people have resorted to working from home, but despite that, the managements have still not chosen to give guidance, is also clearly telling you that one really doesn't know as to what will be the pricing negotiations, if at all there are. Will there be some sort of back-ended cuts in terms of the volumes, etc. So I think those are a lot of challenges. But Cyient specifically, yes, the valuations have corrected a fair bit. I think it's quoting at some 6-7 times FY22. So I think their valuation gives a lot of comfort. But still clarity is still to emerge. So yes, if you're willing to be patient and hold on, it's not a bad business. I'm sure it'll come back. But in the near term, there could be real challenges.
Okay. Now, but let's talk about the positives because the pre-open rates are looking very, very robust. I'm going to ask a difficult question to you, Shubham Agarwal. Reliance Industries, for somebody who doesn't have a position as yet, if it starts off at the levels that it is indicating, which is northwards of 1550, would you initiate a buy?
Neeraj, I would still initiate a buy because the target on Reliance is roughly around 1620, and still it is far away from those levels. So I'm not very sure about what will be an exact stop loss level, but we can just keep a 2.5% stop loss from where it opens, and 1620 is the level that we are expecting to get retested. So certainly even after the positive opening, we should look to buy it.
Okay, certainly after the positive opening, we should look to buy. It was amongst his top calls as well, Shubham Agarwal's. Now, the other one is Bharti Airtel. Shrikant Chauhan gave a bit of a dip yesterday, was down 3%, might start off marginally higher today. Is there a long opportunity in Bharti Airtel?
See, certainly it's a buy, but buy with a at least medium-term view, with a view of next 2 to 3 months, because currently the stock is very close to its previous high of 568, 570, and most of the time I have seen that it starts confusing to traders or as well as investors when it starts trading very close to its previous high. So let the stock break its high of 570, but till then, if there is a medium to long-term view, then certainly it's a buy. What Samir was telling in the morning is I'm completely agree with him, because the stock is into long-term breakout, and if there is a patience even in this type of market, and overall telecom sector is really doing well. But if there is a patience, then certainly it's a buy because the stock is volatile. It may trade between the range of 560, 570 on the higher side, 460, 470 on the downside if something goes wrong in the market. But keep patience, keep adding on declines, and the final target that we are expecting should be in the range of somewhere around 700, 750 because it's a breakout of last 10, 12 years. So certainly it's a buy, but buy with a medium W.
Now, Samir Narayan, that's my question to you. Again, people get scared of buying stocks which are near tops, and at times, actually, that might be the right thing to do. My question is, I know we discussed briefly Bharti Airtel, but for the benefit of a lot of viewers who are tuned in right now, are you a buyer in Airtel? And if so, why? And what's your vision? Is it a short-term investment that you're doing because telecom is in focus, or do you reckon that it could actually gain, multiple percentage points over the course of the next 1 year?
Neeraj, I think the way the landscape is evolving, one should look at telecom as the next consumption proxy because, it has got all the metrics that, the data usage is now virtually a constant. Everybody is, that's something that everybody needs. So before you buy groceries for the month, you actually go and, fill up your data plans. It's come down to that level. So I think the consumption in India has to be played through a sector like telecom, which today you're seeing that, yes, given the fact that the tariffs have also started moving up, that augurs well that the time of freebie is now gone. So I think now you'll probably get, bang for buck, and companies which have done the capex, which have ensured that the user experience and customer experience is good for people to, maintain on the network and the usage to go up, I think they will continue to, reap the benefits of the past investments. So I think from a next, say, 3 to 4 year kind of a horizon, telecom is the right way to play the consumption boom in India. And plus, if you look at these new emerging trends post-COVID, be it work from home, etc., that would also mean that the data demands will be here to stay, and the data usage will only go north. So that shows that you will have customers who will be hooked on, who are willing to pay, and it doesn't pinch. I mean, tariffs can easily go up another 20, 30, 40%. So I think if you put all this together, given the fact that the runway for this sector is quite decent, and at least for the next 3-4 years. So one would be favorably positioned to playing this as a consumption proxy because Jio will basically be the driver who will be the disruptor, who will ensure adoption, and Bharti would be the second number 2 strong player who will also have their share of captive customers. So I think both these qualify as good secular plays.
I think the market is, some quarters of the market might be thinking that if Reliance is doing all of this, can it actually even destroy Bharti Airtel? I would reckon that we'll at least be a duopoly. I doubt that a monopolistic structure in India is possible, is feasible, and is in the interests as well. So I think we're looking at a duopoly. Sure enough, Reliance could be the market leader of sorts, but this guy, Bharti Airtel, has captive customers, and as Rajiv Sharma of SBI was saying, it could be a matter of time because there could be a global partner which might look at some tie-up with Bharti Airtel as well, because it's not a fringe player really. It's amongst I mean, it is a large player, so it'll be interesting to see how Bharti Airtel does in the days to come as well. But Reliance is on a roll really. At the end of the pre-open session, 2.5% higher, though I must say the bigger one is HUL. And Shrikant Chaur, I'm tempted to ask this to you again because it was a top call from you at the start, but it's already starting off 4% higher. So now, is it imprudent to try and go long on HUL?
Then certainly it's a buy because the stock is forming fresh impulse trend in the market, and at the bottom of that particular impulse, the stock has witnessed huge volume. So I am very much confident that the stock is heading for at least 2300, 2400, which even Shubham is also supporting. But the stock may even cross its previous high. That's the overall formation which the stock is suggesting. So it's a buy. Even if there is a higher opening, just wait for maybe a few hours because the stock is completely volatile. A market is completely volatile, and it is not confident. So in case if there is any dip, certainly it's a buy. But if there is a long-term view, at least next 12 months, then it's a buy even at this price. In fact, we like other FMCGs also like Britannia, Colpal, because they have shown spectacular run-up. In fact, a lot of people are shorting because it's a consumption theme on which they are taking call and all. But in last almost all corrections, whenever the market recovered, it recovered mainly on the with the help of consumption stories, with the help of auto sector. And this time also I'm expecting the same way to happen.
Okay, we are minutes away from market open. So let's tell first our viewers all that they need to know to stay ahead in trade today before we talk about other things. So Reliance Industries is in focus as investment from Vista Equity Partners. They'll invest about 11,367 crores in Geo Platforms. The investment values Geo Platforms at 4.9 lakh crores, and Vista's investment will translate into 2.3% equity. Reliance Industries is considering selling stake in Asian Paints valued at about 989 million as the conglomerate steps up efforts to trim its debt, said people familiar with the matter. The company is in discussions with banks for a potential sale of that 4.9% stake. Hindalco's subsidiary Novelis reports earnings higher than consensus with a profit of 63 crores in Q4 amidst the coronavirus uncertainty. Tata Motors has withdrawn the NCD issue of 1,000 crores in view of the higher cost expectations from market participants due to tight money market conditions. RBL Bank reports a 38% growth in net interest income, notch higher than expectations. Higher provisioning leads to a net profit decline of 53%, still above estimates. ICICI Securities has a strong quarter with 28% growth in profit with strength coming in from retail equity space. And Signed Board approves increasing investment limit for foreign portfolio investors from 49% to 74%. The company reports a muted quarter with revenue declining 3.8% sequentially. Well, those are a few stocks that you have to monitor. I'm focusing a lot on the large caps today, viewers, with reason. But the interesting bit could also be what's happening at the mid cap and the small cap end of the market and some stocks in focus. So, future retail is up another 5% at about 80 odd rupees. Do watch out for that one. What is down is Signed, down about 8%. Mahindra CI is down about 5%. Be careful of this one. It's now moving from circuit to circuit. Lotus Labs has a negative start in all probability. So that looks like starting off lower. And from amongst the stocks which are on my watch list in the session today, do watch out, of course, for, RBL Bank starts off about 3% higher. LIC Housing Finance at 265, so that's interesting. And Deepak Nitrite marginally higher at about 556. Sameer, one quick fundamental view, and that is on aviation. Interglobe Aviation is not quite cracking. Is it because it has got cash on its books and therefore, even if the space were to dwindle, this one would probably still be better off?
Well, Neeraj, I think one needs to understand that yes, the airlines have to be around. I mean, it's not that humanity will stop flying whenever this crisis is behind us. And, in India, the only strong player is basically Interglobe. But yes, having said that, the crude pricing is definitely giving a lot of comfort on the cost side. But yes, in the changed scenario, how will the new operating conditions change? For example, will you be able to sell only, a small portion of your entire fleet because of maintaining social distancing, the kind of, norms that you have to do in terms of passenger check-in formalities, etc. So the amount of timing, etc. that will take. So how much of travel will it hinder? Companies will also obviously cut back on a lot of, business travel. So all that having said, I think the clear trend for Interglobe is that, yes, even though there is some amount of fortified position that it has as amongst the dominant market leader, but one really doesn't know that could this lockdown be for 2 months, 3 months, and even after that, how much will the restoration to normalcy take? Because most of these you will probably see short-term cash flow crunches, and that's the reason why people are wary of taking bets. But I think at current valuation, from a say 2-3 year perspective, it definitely merits a small allocation, because I'm sure airlines will not go away and people will not stop flying. So people who have strong balance sheets should be the one who will be able to tide out this crisis better.
Okay, Sameer, we'll leave it at that. Thanks much for taking the time out and being with us today.
Thanks.
Well, less than a minute left. Very quickly, top calls. 10 seconds each. Shrikant, on to you first. Your top call for the day today.
Yeah, along with JSW Steel, I would like to add Hindalco, which is currently opening around 122, 123. But from here, the stock can again manage to move towards 130. So it's a buy at these price with a stop loss at 119 on the downside.
Shubham, your top call.
Dr. Reddy 4000 strike call option can be bought. Target will be 180 with a stop loss at 100.
Okay, so bullish on Dr. Reddy's essentially. Viewers, gentlemen, both of you, please stay on. We'll just take in quick opening thoughts from you, post market open, and then let you go. But here's how the markets are starting off. this Friday morning with a lot of green on the screen. The question is, can this last? Can Reliance lead it even higher? Can HUL participate? Dr. Reddy's is up about 3.5% too, or 4.5%, 5% now for Dr. Reddy's, 6% for Dr. Reddy's. Well, that's the big blowout mover, but let's watch the others too. So 2% for the indices, 1%, 2% for the Nifty Bank as well. And let's talk about the individual performers now. Dr. Reddy's 5.5%, 4,050. Hindalco 3.5%, HUL about 3%, Bajaj Finance 2124, 3% higher, Reliance Industries 1546, doing very well for itself. Shree Cement, HDFC, IndusInd Bank, all of them are trading well. Axis Bank about a couple of percentage points as well. What is not doing well? Wipro marginally lower, Britannia is slightly flat, Power Grid is slightly flat, but yeah, that's the long and short of it. What else? Let's just try and see what individual big performers might be. So Airtel, a very muted uptake, about 1.25%, nothing too dramatic out there. Bajaj Finserv, about 1.5%, so nothing too dramatic out there too. Adani Ports, yesterday's top gainer, is just about 0.78% higher. But what about the other movers? So, well, Asian Paint 1627 now, so that one is certainly moving. Britannia is marginally. Cyient is down 5%. So monitor that. Deepak Nitrite is in the red, by the way. Monitor that too. Escorts 765 and counting, from 708 day before yesterday to 765. Big mover there is Escorts. HDFC Bank 939, 940. So that's doing very well too. There is strength in. Actually, no, Nestle is just about flattish. RBL Bank is again flattish too. ONGC about 1.7, 1.8, 76 or 77. And Tata Consumer Products 2.5% higher, 349, 350. So those are a few names that you need to monitor. Varun Beverages 1.5% higher. Okay, quick opening thoughts. Actually, there is some talk of the MSCI review and that might impact companies like Tata Consumer. Shrikant Chauhan, coming on this one very quickly. Tata Consumer Products at 349, 350. Would you be a buyer?
It's a buy because here also the stock is forming some bullish triangle formation, and on every decline it's a buy because I think the stock is going to cross its previous high. That's the overall view on the stock. Currently it is at 349, but final stop loss that one can keep should be somewhere around 320, which is a little bit longer from current levels, but it's a buy at these price, more on decline if there is a view of next 3 to 6 months.
Okay, so not at the current market price, but on declines is what you are suggesting, Shrikant. Okay, Shubham Agarwal, Dr. Reddy's, you mentioned a call option. I think the stock is arguably starting off very, very well for itself. It's 5% higher. Would you still be comfortable going long? And even if you don't recommend buying futures, what are the targets that you're looking at?
Neeraj, it is very surprising that the stock opened at 3,900 and immediately flared up in the opening, which was not being indicated by the pre-open. So I think that one has already indicated that the breakout is there. So the call option target is already achieved, but I think one can look to initiate position from a slightly positional perspective, and the stock has pulled back intraday. I think 4,000 level is a lucrative level to enter. So one can look to buy in futures with a stop loss at 38.50, and the next target for the stock that I am expecting is 4,300.
Gentlemen, both of you, thank you so much for joining in today and giving us your thoughts. Really appreciate your time. Well, let's get in marquee fundamental voice. Jinesh Gopani of Axis AMC joins in right now with his thoughts. Jinesh, so good having you. Thank you so much for taking the time out.
Yeah, hi.
Hi, Jinesh. Jinesh, what's your sense now? We've been very choppy and volatile. There is talks of stimulus coming in at some point of time. We can't quite time that as well. What are you doing with the flows that you might be getting right now? Are you trying to sit on some bit of cash, or if you have an all investing strategy, where is it that you're looking to invest?
So I think, Neeraj, this is clearly a difficult period, a challenging period, and what will happen after 2 to 3 months on the health crisis, nobody knows. We can only take some experience from what's happened in some of the Asian markets, economies like Taiwan, South Korea and China. And if we are able to at least avoid catastrophe and open up the economy in next 2 to 3 months, then I think you are in for some stabilization difficult to give you any number, but maybe around 8,500 to 9,500 kind of levels. However, if the health crisis is not abated, then I think we might have one more leg down if India is not able to come out of this crisis. I think earlier, 1 month back, there was a lot of scare, lockdowns, economy was almost standstill. At least now we are seeing some parts of the economy, maybe 10-20% of the economy is trying to open up. We are seeing green zones being created, orange zones. So I think at least we expect that if all goes well, by June, July, at least 40-50% of the economy should open up, and by August, September, again, if the health crisis is averted in the large cities, then at least 70% of the economy should come back to at least start. I'm not saying to the normalcy, but I'm just saying at least the activity should start. It's very challenging. You have never seen this type of event where economy is stopped completely. If you see April, GST revenues would be down 70-80%. So that speaks about the losses in terms of GDP due to this lockdown. So I think clearly it is a difficult phase. The only strategy what we are following is to be in best of the best gold standard names in the portfolio who are able to survive this phase in a better manner as compared to others. It is going to be a long haul. So we need to be calm and patient rather than getting into greed on a day-to-day volatility. So I think we are investing whatever money we have slowly, steadily with a view to keep invested in the same stories, even if they are down 15-20% from here on, and are a winner in their own sectors in next 2 to 3 years.
Okay. Where is it, Jinesh? You know, the last 2 years, you guys have shown that you have a knack of identifying where investments could move in and investor preference could move in. Where is it that you're finding? Because currently the market seems to be obsessed about, let's say, telecom, seems to be obsessed about healthcare to an extent, and maybe very select consumer durables. What is it that you believe holds in or would stay in good stead over the course of the next 12 months, considering all that you just mentioned in your opening statement?
Yeah. Again, it remains to be seen how economy open up, how government stimulus comes into play, which sectors are able to navigate these phases, which companies are able to navigate. But I think clear one line I may say is the strong balance sheets and strong management will really do right things for their people, for their business, for their balance sheet. And I think everyone is impacted in this scenario. The lesser the impact, at least better would be to invest or just remain invested in those companies. And hence some of the sectors which you alluded have some those type of traits where I may say strong cash on their books, good management, and also, as I said, relatively less impacted as compared to some of the leverage sectors. So clearly in that order, let's say consumer staples, technology, pharma, and financials, in that order should be the order of preference as of now. However, in next 2 to 3 months, we will review it again, and as things open up on the economy side, we'll have to see whether the cyclical sectors like autos or auto ancillaries is worth playing a bet. See, the problem is we don't know the magnitude of job losses, salary cuts, the impact on consumption, how the consumer behavior changes after the COVID-19 issue. So it is very difficult to even pinpoint in terms of numbers that what would be FY21 numbers. So it is easy to run any number on the Excel sheet, but it will not help you out. So everything goes to then FY22, and for that you need some at least assistance in terms of stimulus from the government, some momentum coming back in economy by August, September, because then only till the time you don't have any hang on the numbers, either in form of GDP numbers or in form of earnings number. I think we are all playing in a bit of a dark in terms of just guesstimating what to do.
Okay. The other question, Jinesh, that I have is, and therefore, I'm just trying to bifurcate this. So would you say that therefore B2B, instead of a B2C business, a B2B business might more be a good thing, because consumer preference might not be known, but businesses will need to do what they have to do, and therefore is B2B the thing to focus on, or no, not quite?
No, so possible, but in India you have less B2B business to play around, and so maybe you are talking about some export companies, specialty chemicals and all those things. So clearly healthcare, I should have said that even specialty companies also come into that game itself. So I think those names, as I said, would really be the darling. And maybe in next 3 months, see, India is a consumption story at the end of the day. So you cannot ignore that. Only thing is how consumer behaves after this issue, after opening up, what are the kind of job losses, what are the salary cuts which impacts the consumption, will take time to understand. And this we will understand only during the festive season or maybe after 6 months. So clearly B2B is also, I mean, the sectors which I alluded to in some form or the other. So for example, technology as a sector, if you see, it is clearly sort of a B2B kind of a play. Even healthcare, I would say it is more of a half, at least 30-40% would be sort of a B2B, not B2B, but at least going to exports or something like that. Even specialty chemicals. So I think you should have a mix of both, because we don't know how, I mean, if there is a big stimulus or a V-shaped recovery, because even globally, if you really see, China has, I'm not comparing India with China, but clearly China has bounced back on the consumption side as well. So I think just wait for 2-3 months and we get a real feeling on how things will pan out.
Okay. Jinesh, okay, so then let me try and ask you if in the B2C space, everybody seems to be believing that, and for more reasons than one, that telecom might be that pocket that you could bet on, and there are multiple factors right out here. One, Jio is able to attract the money that it is, and somebody was talking about this, and I don't know how you view this, but at some point of time, Bharti would have no choice but to partner with a global giant. A global giant would have no choice but to partner with Bharti, because you want to be a part of the Indian landscape. That is part one. Part two, this is that one commodity or one product that people have no choice but to buy month after month, and maybe only the usage is increasing. Is this a pocket that people could, or that you would look to bet on from a maybe 3, 4, 5-year perspective?
Yeah, I think certainly if the tariff war on the telecom side is for now over, and if there are no further tariff wars, then obviously that tsunami which had come in terms of huge tariff war has gone away. So clearly there is a good breathing space. I don't know how fast the tariffs will move up, because it remains to be seen how 3 players behave after the COVID-19 situation. But you are right that suddenly after the deal flows happening, there is a clear interest in India in terms of how to participate in this such a large consumer story. But at the end of the day, then Neeraj, that becomes B2B and B2C both. So, so I think there are pockets of huge opportunities. If you see some of the deals which are happening recently, clearly there is huge interest in India. Still, there is huge interest in India from a longer term point of view. So I think money will flow certainly once you have clarity on the reopening of the economy. If you, again, I am saying, if you take Taiwan, if you take South Korea, they are just, if I'm right, they are just 4 to 5% down from their highs. So I think clearly money has moved that side wherever the economy has opened up nicely. Unless and until we have a disaster in form of second wave, third wave, then I think that will create a big problem. But if India is also able to avert a disaster, then clearly you will see a lot of deals happening in India as well. And clearly, if you take worldwide, when the stock markets fell, the PE activity was very, very high. There were a lot of deals which are happening in the world. And I think the same you might see happening in India as well. So I'm not surprised that why deals will not happen.
Yeah, no, of course not. Yeah, maybe they could happen. Just one final question, Jinesh. Um, every fund manager rode the uptick in consumer financing names for the better part of 2019. I'm sure you probably had exposure there as well. What is your stance now? I mean, did you take some chips off the table at those stratospheric valuations? And are you looking to add them now? Because there might be pain, but maybe some quality franchises would eventually stand out. As you mentioned in your opening statement, that for some businesses, it's not about FY21, it's about FY22.
See, I think clearly financial, as I said in my opening remarks, it's a leverage play. Obviously, takes a beating because it is a direct correlation to the economy, and economy had come to standstill. So obviously, the issues around liquidity, the issues around solvency of that company, and also issue around asset quality will be there. Will be an issue for some period of time for this sector. And clearly, I think leverage plays will be avoided for now. But you are right that some of the plays who are able to survive this onslaught of slowdown or near-term economic impact, if they are able to survive, if they are able to raise capital, if they have liquidity in place for next 6 months, I think they will become very, very big over next 6 to 12 months, because a large part of the market will go into consolidation, and hence the market share gain as and when economy revives at its full level, they will benefit disproportionately. So financials being backbone of the economy shouldn't be ignored. But obviously what we have done in the earlier part of this lockdown, clearly we have taken out position across the financial space, and we have gone a bit underweight on the sector, because we clearly feel that like other leverage plays, even this is a leverage play. So I think down carefully looking into some of the stories, once they are down 30, 40, 50%, and then just evaluating what managements are up to, what kind of decisions they are making. The results will come out. So we'll have to see what kind of provisionings they have done. So all those issues will help us understand how these companies stand. And clearly the strong groups will survive, we feel, and will again come back. Maybe they might not get those high valuations which they used to get earlier because obviously it's a overall sector. But I think they will also come out of this mess in 6 months, and they will start growing as and when the GDP improvement happens. But I think that is slightly a longer haul, I would say. Unfortunately, we don't have huge technology plays in India where the adoption of technology is taking place in such a faster pace across the world, and hence we have to be relying on some of the sectors which eventually will get less hurt as compared to others.
Okay, Jinesh, one final question. Would you reckon that the near term, your investing decisions would be based upon the quantum and the pace at which the stimulus comes? I mean, if the stimulus gets extended for a couple of weeks more, would it impact your investing decisions in the market?
See, I think stimulus is needed. How it comes, when it comes, and the quantum, how big the quantum is, I think clearly government is working, and they want to give it to the targeted segment as much as possible. So I don't think there is an issue around that. But obviously, every time problem is market always starts discounting very, very fast. And if there is slightest of the I would say not keen to what companies or the sectors would want, I think obviously people will take it negatively. So I think to that extent, we don't base everything on the stimulus package, but I think at some point because you have a hit of 270 to 80 billion dollars of GDP to the GDP because of this lockdown, it would become important for government to share that burden. I don't know how much they will share or how much they want to share, but I think it will become very, very important to give stimulus to some of the sections of the society, so that it would be easy for the economy in itself to come out from this slowdown. Else it will take long time for economy to bounce back.
Okay, Jinesh, we will leave it at that. Thank you so much for taking the time out and being with us today and giving us your thoughts. Really appreciate your time.
Thank you very much. All the best. Stay safe.
Thank you. Well, stay safe is all that we can say. As we wrap up this leg of Indian Open, let's try and see what is doing well. Well, Airtel is marginally in the green, Bajaj Finance marginally in the green. I do want to mention specialty chemicals yet again, and I think Deepak Nitrite is the poster boy out there, 565, 2.5% higher. There is some strength in Reliance today, 2.5% higher at 1546. ONGC marginally higher, nothing too dramatic. Remember, Shubham Agarwal had a short call on that one. So do watch out for that as well. And Power Grid, HCL Tech, Asian Paints and Adani Ports are the ones which are languishing. IndusInd Bank and Dr. Reddy's are the two which are doing well in trade. So do watch out for all of these names. And Kotak Bank, by the way, Kotak and IndusInd moving together, that's an interesting combination. Well, we wrap it up on this leg of Indian Open, viewers. Thank you so much for tuning in. Stay safe. Remember, do tune in at 4 p.m. today for a very special conversation that we have with First Global Securities. Devina Mehra and Shankar Sharma join in to talk about all things investing.